The S&P 500 took a little bit of a hit today. We look at the SPY, we look at NASDAQ and what's happening there. We saw a really nice move yesterday for FOMC. We went heavy into detail with everything Powell said, all the major concerns. And then overnight, we get Donald Trump making some very bold statements in regards to how we're going to be moving going forward and really telling the Fed how to do their job. Now, we've seen today, we saw a little bit of downside on the SPY. Not much, just a little bit. But we saw more significant downside near market open with the bounce and obviously selling back off. So we get a lot of information of the reaction from buyers, which is really what we need to be talking about is what's happening there. We look at volume, and again, nothing really crazy on the volume. It so far looks like we're still overall consolidating when we look at SPY, the NASDAQ, everything in between. From the outside looking in, it's a very clean, easy chart to see. I mean, it's clear as day, to say the least, on the 15-minute, 1 hour. It still looks like you're overall just kind of consolidating, making this bear flag back near the what key level, the same level we've been talking about for what seems like days now, that 200 daily moving average, which will come in and you can actually see right there, this yellow line, which is where you keep projecting. Again, you've seen the massive drop that we've seen over basically the past month and a half, just straight to the downside, right? And that's really what's taking place when we look at the market. Now, again, from yesterday's video, I told you, I don't think FOMC was good. I don't think it was bullish. I didn't see anything that changed the narrative for myself. So that had to be very clear on my end. And I made a post today on Twitter just so you guys can see as well that the overall goal of this channel is for me to be as transparent and honest with you as possible and giving you my thoughts on the market, right? At the end of the day, I might lose followers if you don't like my opinion, and that's okay. That is A-okay. I've been doing this channel when we had 10,000 views a day to when we had 1,000 views to 2,000. It's been up and down. But at the end of the day, the content has never changed, and it probably never will. So again, as I look at the market, I still see very large caution signs. Now, the other major part here is the NASDAQ, and we're not going to go over the charts right now, but I do want to just show you where you're rejecting over and over and over here on the 2 hour, 4 hour, and daily. Again, the 21,120. And why is that level so key? Is because, again, we continue to talk about the same levels over and over and over. Today in Discord, I went over it once again. What are we looking for? You're looking for a break above 19.8, a hold above that, and the VWAP, and you're looking for a push to 20,020, then 20,012. Below 19.8, you're looking for 19.7, 19.59. Very clear, descriptive what we were looking for. So what did you get right out of open on the NASDAQ? It's worth mentioning what really took place. You can bring up the VWAP, get an idea of what happened there. Market opens, you push above VWAP and above 19.8. Once you mount VWAP, it's a straight line of basically almost 200 points straight upside right into our targets, and then we reject back down and grind the 9 EMA. Now, that can all be found inside of Discord and trading with us every single day, but it's also partially here in the YouTube videos as well. But if you want to trade, see what we're doing, like yesterday we had Apple puts. We were targeting again. We got in right at market close at 435. Look what we said right before market open. Apple gap fill at 213. Beware. Contracts over 520, 530. Right there at market opened as well. Really the only trades that I took. And then I got into another position near the end of the day as well. But again, Discord link, if you're interested, is down below. The starter plan will be capped out pretty soon. And the link to our website is optiondrops.com if you want to get more information. And free education is on there as well, so take advantage. So what are we looking at right now going forward into the market? Now, Trump, if you missed out, immediately after the Fed meeting, he said, look, if the Fed knows what's good for them, they need to start cutting rates because the economy is transitioning to tariffs. Yeah, that's what he said. Trump says the Fed should cut rates to ease the economy's transition to tariffs because tariffs are here to stay. Now, it's also important that during Powell's FOMC meeting, and I want to make sure that I'm not just pushing a bearish side of the narrative, is that he said that previously tariffs, the inflation was transitory, right? Which is in theory really good. Like, it's a good thing to think about because again, once they cool off, the market will just readjust. Now, the problem though is he said that's not always the case, right? And if you combine it with inflation that we already have, it could lead to bigger issues. So he made sure to comment that this is not always the case and guaranteed. So moving forward, it's important that we pay close attention to that. He's also was really clear that they are not going to cut rates until there is a valid reason to do so, meaning unemployment goes up, the market growth slows significantly. And he even discounted the viewpoints of Michigan data that we've been tracking here on the channel, which I would say, if we look at Michigan's data over the past 2 years, has been fairly accurate. And the market's responded to that data time and time again. It almost seems like Powell and the Fed are picking and choosing when they want to look at some of this data. But I'm going to leave it to that. That's more of an opinion and not just fact. That is overall what Powell said regarding that data and what's happening there. And then proceeding into today, Levette, I don't know what her name is. I don't know what the person's name is. Whatever. Came out and said, guess what? There's going to be big tariffs, the biggest, some of the largest tariffs coming on April 2nd. The reciprocal tariffs, and it's anticipated to be bigger than what some of us thought. So again, I think the market might think Trump is bluffing, but so far he has not bluffed on any of these tariffs, and he seems to be going pretty aggressive with the plan there still. So again, when we see the market coming into these levels and rejecting, in my opinion, it's still a major sign of concern. Why? Because you're not getting the follow through. You're not getting the continuation. It's a major, major sign and flaw in thinking from bulls, in my opinion. Why? Because again, you're pushing up and you get this slow grind up and then an immediate drop down. Slow grind up, immediate drop down. It's not a good sign when it takes you 5 to 6 hours to push into a target and then 2 hours to reject. It's worth mentioning when sellers step in. Again, it's never been more true. Bulls taking the stairs, bears taking the elevator. And it's, again, what we have seen time and time again. I will also say that for a bulk of the day, I think it was more of the offensive from the Bulls as you look at what happened and what kind of took place here. But again, the volume kind of tells you that there was no real volume taking place. So again, you saw most of that volume come in on the heavy aggressive selling and then kind of stagnating over time as well. So what I will say though, in order to really get bearish here, you have to start breaking some of these lows and breaking the higher low trend that you're kind of forming out here. So as of right now, this isn't a major concern. Now, if we start to break back below 19.6 down here, I get very concerned and we can start breaking back down towards 19.4, possibly even 19.3. And if that happens, I think tech will get a pretty big sell-off. The next thing we look at is what's happening with the larger names, because a few things you want to see is, yes, it's important to identify what's happening with the NASDAQ, what's happening with SPY, but how are those major equities holding up as well, right? We go look at the Mag 7, names like NVIDIA, Apple, AVGO, Meta, Microsoft, and to this morning, I will say it was probably one of your best days overall to get started. The tricky part here is that NVIDIA did nothing. So we saw NVIDIA move very good and semis move very good yesterday with the keynote. And then today they're kind of doing nothing at all, right? And then you look at AVGO giving up all of its gains from 197 all the way back down to 188. And again, we know if AVGO breaks 181, this is going to be a big shorting opportunity. Then you go down to even something like Apple, which again, we had a great open, which you gap down, filled the gap, and then you pushed up, and then you pushed down. But the common theme here is, guess what you're seeing? Lower highs being made now. And this is not what you want to see to be in a bullish structure, as you can see what's happening there. Again, trying to push back down. Where Apple really gets concerning to me is if you start breaking back below 211.5 to 211 flat, because then I could see it's come back down to 209.6, 206.5, and then ultimately back into 2023 highs of 199.5 to 199, give or take. And then you go a little bit further, and again, we're just running through the list here. You look at names like Meta, which had a great open, right? We talked about what's happening here. Above 586, pushes back to 600. You did just that at a market open. You pushed up to 610 and then died all the way back down. Again, great move followed by a terrible reaction. You go into Microsoft, decent move, terrible reaction. You go into Tesla, really did nothing, just sitting at 236. Nothing's really changed overall there as well. So again, kind of my viewpoint. Amazon pushes into 200 SMA, rejects. And this has been the theme. This has been what's happening. You push into resistance, you get a great looking move, and then there's no follow through from buyers. And if I had to tell you what this really reminds me of, okay, being non-biased, right? What does this really remind you of? Now, if we look at this action back here, you'd be like, well, what's really happening? Tyler, this doesn't really remind me of that, whatever, yada, yada, yada. But this is what would happen back here, right? We would push down, we pop back up. We push down, we pop back up. All when we were bullish, right? And you're getting the same type of price action, but towards the downside now. At the very least, I say keep your head on a swivel and be cautious, like I've been saying over and over here, because again, you're rejecting at the same point time and time and time again. It's a big red flag for me. So as we move into tomorrow, what am I looking at overall? Now, again, I'm very interested in the downside, specifically on mid caps as of right now, like IWM names. I look at names like Reddit, HIMS, Palantir, Hood, Kava, Carvana, etc. These are all very interesting names in what's taking place here. Now, I think the Mag 7 has room to the downside as well, but I also think they're getting monster setups across the board. You look at HIMS and what's happening. I've been telling you the target in the short term is back down towards 25. You go look at something like Kava, which was a monster of a name, but now you're getting a major pullback back down towards 81. And in my opinion, what you would like to see is hopefully a break below 72 and a push towards 58. And again, these names moved up very aggressively. So when they get back to illiquid zones, well, yeah, you guess what happens. They're going to move very fast. Again, you have another level there and you're 71 as well. And then you go to names like Palantir, which was one of the most euphoric names, and it's still holding up right now, so I don't think you want to start hammering shorts just yet. But ideally, what you would like to see is getting back below this level here of around $84, $85 and pushing back down, which was your previous high back into December and early February as well. So again, what I'd be watching there. You go into Hood, and again, you get this really BS news that they're adding in prediction services. Yeah, you bet. Exactly what I want to see from a good broker is betting on random events happening. Super cool. My favorite thing ever. Again, I think this is just kind of fluff. Again, I'd be looking for Hood to reject near where we're at. If it gets back below $42.8, $43, I'd be targeting to come back down near lows, possibly even the 200 SMA as well for a monster retest as well. One interesting thing here is what's happening with Bitcoin. Bitcoin is trying to hold your 200 SMA right there. If you can stay above that, you do look decent. But again, I'd be very cautious. I still think MicroStrategy below 281 is a great opportunity for downside. Again, above 281, I don't like it at the downside. So again, you want to see the break below this level, break, retest, continuation. Ideally, what you would like to see there, don't overthink it. Again, the levels are all that matters right now. Now, as I'm moving into tomorrow and as I'm moving into the rest of this week, my viewpoint has been focusing on the strong names if I'm going long, focusing on the weak names if I'm going short. Easier said than done, but I'm not trying to time a top, and I'm definitely not trying to time a bottom. So when I go into what's happening with names like NVIDIA and all these names here, I'm really interested to see if we start seeing a break in overall structure and trend of what's happening. Because again, you're still kind of making higher lows for the past few days, really going back into Tuesday, right? Give or take Tuesday morning, right? You can see that you basically just been like kind of slowly grinding up. Now, what I want to see is getting back below 118 and pushing back towards that low down there as well. Now, another thing with semiconductors as a whole is I look at something like SMH, and SMH doesn't look good, right? Because when you're tracking specific names like NVIDIA, AVGO, I think it does you well to look and understand what's happening with the indexes as well. So when I look at something like SMH, look at where we're at, right? This 227 level is massive. Key SR level where we're at, and we're rejecting so far. So if you find sellers on semiconductors, I think this rolls right into specifically the NASDAQ. And I think tech could roll over as well. Now, we already saw names like Apple. And again, for me, the big three are AVGO, NVIDIA, and Apple. When those move in one direction, you get great movement on the market 9 out of 10 times. If they are moving up, guess what? The NASDAQ's probably going to get a 200-point move up. If they are moving down, you're probably going to get a nice drop as well. So understanding the overall sentiment of what's happening with your major players. So Apple's obviously been up in the air. It can't really make a higher high. It's showing weakness right now. Now, could this change based off of news? Potentially. But again, don't want to be the first one to get in. I don't want to be the one betting on the trend flip in the short term. And again, right now, there's no reason to be jumping ship or jumping to that other side of the viewpoint of, well, the market looks super bullish right now. Again, when you break back above the 200 SMA on the NASDAQ, I'll be the first one to jump on that ship. But until then, I have to be concerned. Now, the last thing that I do want to go over, and again, I got a lot of hate on it on my last video, and I'll probably get more hate on it tonight, the next day, and the next day after that. And it's what's happening with, again, yeah, you guessed it, your death crosses across the board. It's not a good look. I'm going to tell you right now, right? Again, I can go down a laundry list of names. Apple, getting ready to do it. NVIDIA, just got your death cross today, your 50 moving average versus your 200 daily moving average, right? Both of those crossing down right now. SMH had already had it. You're seeing NASDAQ preparing to have it as well, getting very close. One 200-point downside day here, and boom, you're getting it. And I don't think it's a coincidence, again, that you look like you're bear flagging going into the cross, which is hilarious. Kind of actually not funny. Tesla getting ready to cross. It's surprising Tesla has not, but it was so bullish so quick there. So that's why you're not seeing it there yet as well. AVGO has a lot of room to go, but again, you break below your 200 SMA, and again, this will start rolling quick. You go into something like Amazon. What's happening there as well? A lot of room to go right now. Microsoft had already had it as well. So again, you're seeing a handful of names start to really, really look concerning. Now you haven't got it yet on SPY, and then you haven't got it yet on Qs, but they are approaching pretty quick. Now, what I will say is we saw some aggressive selling into the 200 SMA on SPY, but once it broke below, then you saw more aggressive selling. So I anticipate a little bit of chop going into these as well. But again, I'm not telling you to hammer shorts. I'm not telling you to say the entire market's going to crash, because I've never said the market's going to collapse and have a massive recession. I've never said that before. And I personally think this lasts probably until summer. That's just it. But again, I think when you're looking at this, you'd be dumb, you'd be an idiot to not just tread carefully during this action right now. That's the only thing that I really can point out and say is when you're looking at this is just tread carefully, right? The shorts are really for intraday trades, understanding where you're at and what's happening, and then understanding where the big buying opportunities are going to be showing up. Because again, when you get this downside, it's your best time to load up long term. Now, I don't think leaps are there yet, right? Dated options, I don't think we're there yet. But I think when we get there, you're going to have some of your biggest and your best opportunities. And what's going to happen, and I guarantee it will be what happens on the channel. People are going to come back and they're going to say, Tyler, you were bearish, now you're bullish, you're flipping, you're flopping. And that's what happens all the time, right? You're even seeing that in the comments right now. Tyler, you were so bullish, 4 months ago. Yeah, I was bullish when we were at all-time highs. Go figure. Then we broke below the 200 SMA, and Donald Trump started screaming tariffs every day for 30 days straight. Probably going to get bearish. Who would have thought, right? Now we have the giant risk, like we mentioned yesterday, of stagflation, which Jerome Powell said it out of his own mouth, right? And that's the worst possible scenario, again, from Jerome Powell's mouth for the market if we enter a period of stagflation. And that's what's happening right now, right? You're getting consolidation. You're pulling back. And again, we're getting this idea that, the bottom is in. And the bottom could, in theory, be in. But why be early? Why risk your hard-earned money and be early? Why get aggressive on short-term trades when you don't have confirmation? Why go against the trend, increase your risk when you do not have confirmation? That's the name of the game. Can you reduce your risk? Can you put yourself in the best scenario to win time and time again? Because on this channel, what I'm thinking in my head is, number one, how can I put people, or how can I present the idea of putting the least amount of risk on the table, trading with the trend, and also have the sense of understanding that the people watching this channel probably work 9 to 5 jobs, struggle to make their money. It's hard making money. I used to, when I was in college, when I was working 2 jobs before I started trading, when I was paying child support, and I was living with my parents. I understand what it was like. Right now, fast forward, now we're 27, and things are a lot easier. Don't get me wrong, we still have the struggles here and there, but I understand what it's like to go through the grind. And some people, you might be 30, 40 years old and you're still in the grind. And I understand where you're at. That's why I'm trying to be respectful and understand where people are coming from, but also go into the mentality of what you should be looking at with the market right now from an unbiased standpoint. People want to say, again, I agree, the market traditionally goes up, but these are your biggest opportunities you'll get. When you get dips like this is where you make your money, right? Now, if you get aggressive in the short term, this is where you lose all your money. So again, short term, I think the downside still makes sense, makes logical sense to me. Longer term, you're either buying stocks or you're holding and you're waiting to start buying leaps on option contracts, which we'll start talking about here soon as well. But again, what I'm looking at, how I'm trading. Guys, I also want to say right now, something that I've been telling Discord, if you are trying to scalp, and I don't think there's a crazy amount of scalping opportunities in the market right now, okay? You'll get especially during the chop that we're getting, right? Now, rewind a week ago, 2 weeks ago, we had a crazy amount of shorts that were out there, right? But I'm going to tell you, if you were looking at trading and you haven't looked at futures, I really do. This is not just a hype or trying to sell you on anything. I'm telling you, I would just research it. I have a whole second channel on YouTube, Tyler Wilson OD. You can go look it up. It's all based around futures trading and then just education of trading as well. I recommend just looking into it. You trade with basically a set amount of money. Again, you don't have to risk money that you don't have. You just have to pass certain rules. But again, trading futures and prop firms has been a game changer. You guys have seen how much money I've withdrawn. I've been very transparent with that as well. So again, if you're interested, the link is down below for My Funded Futures. Check them out. I encourage you just to look and educate yourself on different ways that you can be trading. Because again, sometimes like today, trading a bunch of options is a dumb idea. And it's one of the best ways you can lose all your money. And the best way to just lose money in general is over trading options. I'm telling you right now, take good setups, take great setups. Don't take mediocre setups and stop trading just to trade. I'll see you guys tomorrow. Have a good one, traders.